Here is your Bull and Bear Stock of the Week.
It's been a while since we've done this, but it's great to have our research director Shiraz Mian back with us again to highlight our Bull and Bear Stocks of the Week. One being a sporting goods retailer, the other an auto parts supplier. Let's get right to it. Hibbett Sports is that sporting goods retailer that we talked about. What makes it a bull?
Extremely good earnings outlook. And as some of our regular followers know, we at Zacks keep a very keen eye on what the Wall Street analysts are doing and the companies they follow. And the most important thing that we are concerned about in the companies they follow are their earnings estimates. We don't care what their recommendations are, we don't care what their target prices are, but we do care which way their earnings estimates are moving, and earnings estimates for Hibbett are moving upwards, very strongly upwards. In fact, in the last 2-3 weeks, estimates for the next fiscal year are up more than 10%. Now, what's driving that positive estimate revision is the company's strong guidance after its outperformance in the last quarterly results. And driving that is the company's strategy, where they focus on the small to medium markets primarily in the southeast of the country, a little bit in the mid-Atlantic and the lower Midwest. But in these smaller geographic markets, they are typically the only sports retailer.
Yeah, they actually shoot for a town or county with a certain population size.
They do. It's a 30 to 70,000 population. They are typically in a strip mall. They have about 850 stores as of now. They're usually the only sports retailer in that town with no other competition. They have a track record of very solid customer service, which effectively gives them an opportunity to literally own the sport retailing business in that town.
Yeah.
Then they keep their merchandising in sync with the local team sports, and that gives them a very loyal customer base. Now, all of that, in addition to a management team that's very focused on executing this business strategy, and a very conservative balance sheet, which is effectively debt-free.
Yeah, I was going to say that's unusual these days.
It is. It's not a huge company. It's about $1 billion, 1.1 billion or something in that range market cap. But they have impressive same-store sales numbers. They guided higher for the next fiscal year, as I referred to earlier. They are opening new stores in their niche market as it is. So a very good kind of under the radar specialty retailer name, which should do very good over the next year and a half.
Okay, that auto parts supplier is Meritor Incorporated, MTOR, the ticker symbol. What is going on here?
This is a roughly $600 million market cap auto parts supplier. Primarily focused on the commercial market. They have these drivetrains and axles and all that good stuff they supply to the original equipment manufacturers. About 40% of revenue comes from the U.S., the rest from abroad. Strong concentration in Latin America commercial vehicles market, in Europe commercial vehicles market, in a growing presence in China, Asia. Now, the outlook for these geographical end markets, particularly Brazil, Europe, and China, is kind of iffy. In Europe, as we all know, with all this financial turmoil, the outlook for production of these commercial vehicles is very weak. About 20% of their sales come from Volvo. They guided recently lower. It is unclear at this stage which way Chinese commercial vehicle production trends are moving. Most likely flat to down, definitely not going up. The same is the case with Brazil. So if there is any positive in their story, it's the North American commercial vehicle market where they stand to gain market share, but that'll be more than offset by the weakness in these international markets. On top of that, they have a weak balance sheet, and the company doesn't really have a track record of execution. So they promise something they cannot deliver. Margins have been under pressure, sales has been under pressure, companies guiding lower. I don't think we have seen the worst in this company yet. The stock will remain under pressure.
Yeah, it's never good when you promise things that you can't deliver.
That's right.
Do you own either of these two?
No, I don't.
All right. Well, if you like the Bull and Bear of the Week and you've missed it since it hasn't been here, it's going to be making a comeback. Don't worry about that. But you can also check out our Bull and Bear of the Day stocks on our homepage at Zacks.com if you're not there already watching this video. With Shiraz Mian, I'm Terry Ruffalo.